Hey, hello, this is Dana Shute. I'm president of Top Gun Trading, also Top Gun Traders Edge and Top Gun Trade Zones. Today, we are going to do an overview of the entire methodology that we have here. Top Gun Trading is the parent firm of Top Gun Traders Edge. It's a live trade room educational mentor service, as well as Top Gun Trade Zones, which is dynamic support and resistance website and features daily market analysis in our market reaction zones or market MRZs, as we call them. Both websites will be offering proprietary indicators, which were developed specifically to integrate organically with our trading methodology. First, let's take a quick look at the required disclosures here. I'm going to scroll down. Feel free to stop the video anytime you want and read this if you're not familiar with it. It's the fairly standard disclosures that are required by the government, the Commodities Futures Trading Commission. And here those come, required CFTC disclaimers. If you've been trading for a while, you know what they are. If you haven't,
on the RTY84.
then please take a look and review them. They are all over our website, plus everything that you get from us as far as information. We'll typically have those attached. It's just a safeguard on our part. Okay, let me just clear that. It's going to be a little bit informal, but we should just do a quick review here. For my background, it's on the website. I'm a 25-year trading veteran. I've traded futures and options for major proprietary firms on 4 different exchanges. I've traded 9-figure portfolios in excess of $100 million with a number of firms. I've trained and coached new traders for proprietary firms. I've evaluated and helped develop algorithmic and discretionary trading systems for firms. And I've had my own, one of the first actually live trading online trading rooms back in the early 2000s, from 2000 to 2005. And I've traded my own accounts both on and off the floor. I was director of marketing and business development for a boutique Boston hedge fund. So I have the background to kind of teach this and to kind of pass this information along. So with that said, the purpose of the video here is to understand what we do. Just a quick overview. You'd see that in the trade room. There's information that goes out if you sign up as a member, and you'll receive that. But this is so you can go over this at your leisure, go over it a few times to understand what you are seeing and what you will hear. Certainly don't recommend taking live trades the first week. It is an educational website regardless, but you should get comfortable with the methodology, understand what's going on. There's a lot of things that are happening here. It's a cohesive and coherent trading methodology, and a lot of these things are basically the summation of my 25 years of trading. Again, we're going to provide a general overview here. It's going to be casual in that regard. We want to expedite the comfort level with the information presented in the live room webinar. So we're going to do a walkthrough of each screen. So as a room member, you understand the layout, the charts, the information, proprietary indicators. We're not going to get into exactly how those work or anything, but you need to understand and feel comfortable with that. Also, how that information helps us select our trade selections or our trades. So you'll be able to watch the video as much as you want to get comfortable. Now, what is it not? What is the purpose? It's not to explain every little detail, every aspect of this. There's just no way we're going to be able to do that. Remember, it's a trade signal room to begin with anyway. The education, mentorships, things like that will be added later. Top Gun Traders Edge is a signal calling room first. So you'll learn a lot about how to trade simply by being in the room. Everything from discipline to trade and risk management to reading price action, as well as what not to do. So that's almost as important as what to do. So as the website reads in different places, we'll be adding mentorships and education programs later this year for traders who wish to elevate to the next level. And at some point, if you want to become successful as an independent trader. With that said, our philosophy, as far as our philosophy, is a holistic trading approach. We integrate a number of proprietary trading systems, we integrate a proprietary trading system as well as some market confluence indicators, which is the market reaction zones, a number of other types of levels. I mean, the market is all about a combination of evaluating and understanding price action, market structure, what type of trading structure you're in at the time, whether it's trending, consolidating, or reversionary. And so you have to be able to identify that and identify it fairly, in a timely manner. So that tells you when to be in the market, when not to be in the market, when to lean on it as far as adding to positions or being aggressive, and when to sit on your hands. Just like a professional poker player or a blackjack player, I'll use that example. A professional blackjack player will count cards, or at least know basic strategy. And when the market is in his favor, or the table is in his favor, he'll bet much more heavily on those. And when the market, in this case, the table is not, the card count is not in his favor, then he'll bet the table minimum. And just by varying your trade size, in this case, your bet size at the table, you're increasing the odds in your favor. And this is an element that's missing to most people's, most traders aren't even aware of this and how important it is. So our approach, again, is a holistic trading approach. It can kind of binds all this different information and indicators to support what we're doing here. So our signals undergo what I'll call a meticulous filtration. I can recognize it in real time because I've been working with it for a long time, and you will if you decide to kind of do the mentorship or take it to the next level as opposed to just a signal calling room. We analyze the real-time market structure, price action, volume profile, et cetera, for enhanced accuracy. Now, the market reaction zones identify high probability areas for significant market shifts, basically guiding the pinpoint, we're pinpointing actionable trade zones. So when you combine that with solid technical analysis and the ability to read market internals, things along that line, these all add to the ability to trade in any market conditions. Yeah, as you are well aware, and you might have these issues yourself, there's people who can trade in only one kind of market. It's got to be trending, or it's a trending day, and then they get run over because they like to trade support and resistance, or they're support and resistance, or trend traders, and they get run over on or chopped up on support and resistance types of days. So it's pretty critical to be able to recognize that. So our methodology excels in identifying superior trade locations during market volatility, allows you to be adaptable and to any market conditions, but our primary focus is on trend trades, because trend trades are much more forgiving. They lend themselves to multiple trading accounts, like most people, and I'll show you why, should be focused on. So we tend to look at that. So I'd say about maybe 70% of our trades we're looking for trends, but sometimes we don't get those, right? So if we don't get those, then there's not much we can do in that case. We have to take the structure trades where you can sit on your hands. That depends on each individual trader and your trading personality and risk personality. So essentially we operate, just like the website says, like professional snipers. So we're kind of patiently waiting for high probability setups. And by doing that, we are able to focus, and that results in consistent returns and lower drawdowns, and as well as reduce stress. Part of that can't be dismissed or marginalized, is that, the amount of stress that when you trade. So just like the website says, when it comes down to it, our trading formula is great entries, great exits, and defined stops. That results in consistent returns, lower drawdowns, and far less stress. So I don't know if you're watching the market here. I'm not really watching it right now. Just have that screen up. From a personal trading perspective, some of the most important lessons or trading tenets
NASDAQ set up signal short on the NQ 2010.
So if we're looking at a trading approach, it's important to note that we focus on day trading. In order to succeed as a day trader, it's important to not adopt an overly strict bull or bear stance during the trading session.
Signal short
on the ES. We're not fixated on predicting where the price for ES or NASDAQ or any market's going to go in the future. It doesn't matter whether it's a month, a week, tomorrow, the next 12 hours, it doesn't even matter. Even the next hour, what we want to utilize in value are our trade proprietary indicators, because they've been designed and tested to help us enter in the correct direction of trends, even if they're short trends, and anticipate reversals into key areas of support or resistance. What matters most to us is catching the immediate market movements and trying to trade from one level to another and giving us what the market will give us, as opposed to what a lot of traders are, is it's like, I need this, or I want this, or I can only risk this much. No, you got to put stops and targets where the market dictates that. So kind of successful trading, there's a lot of elements to it, but that's a key component of it. So whether it's a trend continuation trade, if a trend is present, or reversal trades into key zones of support and resistance, that doesn't matter. That's what we're looking for. By doing so, we focus on locking in profits and growing our accounts, which for most of us is trading PA and EA accounts, and likely using a trade copier. We're a big proponent of that here, and you'll see why shortly, because it helps by reducing your risk and the amount of pressure on yourself to obtain a certain level of performance. You can use that,
NASDAQ
tone that
impending
down, or
trade
scale
short
that down
on the NQ
and
2010.
you can do incredibly well. And I'll show you, we have a tool for that. So after that, once the trade is complete and we're done with that, we essentially reset, take a breath, we stop, and we reassess our analysis and get ready for the next trade. So while we do feel it's important to have a general
Dow impending trade
market
short
inclination
on
or
the
informed guess, if you
ES42
want to call it that, about the potential price movements, which is why, in the morning we provide members with a morning market brief. And if you're a Top Gun Trade Zones member, you get actually a more detailed report and levels and things like that. And they kind of go in again, hand in hand with our proprietary indicators. So it's crucial to understand that the ability or the understanding of what, hey, where's the market going? Where do I think it's going? And have that tone. It takes a backseat to executing real-time trade plans. So contrary to popular belief, algorithms used by institutional firms and the approach used by most seasoned traders, including myself and other very successful traders I know, it's not attempting to make predictions of price trends. If you're a day trader, the approach involves responding to taking actionable signals and sticking to a disciplined risk and trade management process. That's the essential strategy for making profits as a day trader. All traders, especially those beginning their journey, need to understand that that trading success centers around recognizing that trading is all about probability, which is understanding what we do, simply the math of your trading methodology, having a solid trade plan and the discipline and the knowledge to execute that trade plan effectively. So whether the market on any given day is experiencing a significant down day, a relatively uneventful kind of consolidation day, or an upward, surge like, recently, Top Gun's Trader's Edge, our method involves responsive trading based on price action and playing either trend continuation trades or support and resistance structure trades using the market reaction zones and other elements to that. And we're doing it one trade at a time. And after that, we reset our analysis, we move on to the next trade. And regardless of the outcome of that one particular trade, it doesn't matter. That's just one trade. One of the things I learned when I was on the floor, the first thing they did is one of my mentors said, I just want you to get in and out, get in and out. I don't care. Just make a tick, lose a tick, make a tick, lose a tick. And the purpose of that was to understand that, they're just trades. And that if you have an edge, then if you're losing, one or two ticks, and then you're in there for the 7, 8, 9, 10 tick trades, then the math is going to work out, just like I was mentioning before. So that was to get you comfortable with getting in and out, just taking small losses and getting comfortable with losses. And essentially that's what you need to do here. One trade isn't going to matter. We're not measuring ourselves by days. Maybe as a day trader weekly, we're looking at it, and then certainly monthly. But, you're going to have losing days. That's just part of the business and stuff. But there are, and I'll get to that in a second, but something else that's a good point. So allow the market to unfold naturally and respond to the price action rather than attempting to predict where it's going is a key principle to success. So remember, we're not investors in our role as day traders. Our role is to purely seek profit from the daily movements of the market and not to get emotionally or financially invested or tied to any particular trade or analysis, okay? We're snipers. You can think of it as snipers. If you want a little more passive, you can think of it as a surfer who patiently waits, for the set of waves and select it there. It's all about trade selection and patience. There's a lot of that in this, in being successful as a trader. So we're simply looking for the highest probability trade setups with the best risk parameters. And that's it when we're looking to exploit those setups. All right, so, I'm actually going to cover a few things here. Before we jump into it, let me take a sip of water. And I want to get your attention with something. I will show you a screen that probably doesn't make any sense at the moment, but we're going to go over it. Tell you another thing that we like to do here, but this is just today. I'm testing multiple. This is 10 accounts tied together. They're all SIM, but that's essentially what I do in my real accounts and just trading this methodology. Okay. I mean, that's a lot, but that was, believe it or not, this is micros too. All right. So
NASDAQ impending
I will
trade
just show you
short
the power
on
of
the
this
NQ
particular,
2010.
the methodology here. I'm not going to go in. These are indicators. They're all proprietary. But this happens to be crude market. If I go in here and just put on this little vertical line, the best setups, I'm not going to explain in detail, but what I know I'm looking for are, there's a lot of statistical stuff in here, but I'm not even looking here. That's why I have the price squished up. I don't know, but I can tell where I want to enter based on these trades, okay? And I'm looking for certain price movement, and I'm looking for, like, the indicators are so strong. I don't need to see the other. I can tell what I'm looking for in the trades, okay? So I marked it that quick. I have no idea what's going on here. I've done this with people and just have them tell me a market, and then I just, in a time, a day and stuff. So I mark these trades. This would be in real time what I'd be looking for the setups. And then I just do the fixed scale. And then I just ask, like, okay, I didn't even look at price. That was just the indicators. Okay. Now you tell me if you can make money with these entries. Okay. Now this is a loser. That's actually, I would add here because there's a divergence here, but I mean, this one, we're not like just jumping up, but let me just finish my points here. You're done for the day. Okay. I mean, that was, this is crude. So this is all day, but winner, winner, loser, winner, and they're not just winners. They're big winners, because guess where the stop goes on these trades here. Okay. Even if you, for some reason, put your stop like right here and that ticked you out, which we don't do that. Okay. There's a certain thing, but even if you did, then this is basically kind of came up, maybe went to break even and you got out. Okay. So this is a wash. You still got a big winner here. Okay. Big winner. All right. You shouldn't be out of that, but if you did, you did. This is a big winner, and this is a huge winner, and this is a huge winner. Okay. If these are 4-1 on the odd, for R, you basically had one, two, three, four or five big winners, one tiny loser, because the pivot goes right below the pivot by a certain amount of points, because that's all statistically based. And this is a hell of a day. Now, this is this is basically the crux of the program, but it also, and we'll get into it and you'll see it, you'll see that when the market is all choppy, it keeps you out of it as well. But you can also use that as an indication to do, I'm going to get rid of this annotation. On a sideways day, when it tells us that it's sideways, you can actually know that it's support and resistance, so you can be entering and exiting on those trades. So you saw me mark the chart. I just pulled that one up, flattened it out, didn't see the price action. And then, so if you're following a price action, you can even finesse those entries even better, but I didn't even do that. So that should be something that, gets you pretty interested. Let me clear that out. Now I'll bring up, I was going to say this for later, but I want you to understand how important this is. So I'm going to pull this up. This is a tool that we give our members. And we trade mostly micros here. And the reason is, and this is something that you'll be able to play with, but you'll see why it's so important. And is that most people are they're trading full contracts or they're trading micros and not understanding what they're actually doing. Your goal should be to be getting multiple accounts, okay? Now, I'll explain how the spreadsheet works. Any of the blue fields you can enter amounts in, and that's it. So what this is, I call it the trading success calculator, okay? If you look at yourself and honestly appraise where you are as far as a trader or what you can achieve, all right, then you can start to see what is possible and what is realistically possible. Now, right here, like here, winning trades, losing trades, total trades. So if I ask most people, I say, can you achieve a 60% win rate out of like 10 trades? This is based on a daily basis. So let's just say you do 10 trades in a day, okay? So if somebody says, yeah, I can achieve 60%. All right, so 60%, that's a win ratio of 1.5 to 1. Now, let's say you're going to trade 3 micros, and this is NASDAQ. And I ask, like, what do you think? What do you try to do? I usually try to go for 10 points. These are points, these are ticks. So I try to go for 10 points, and my losing is, 5 points, 2 to 1. Okay, and there it is. The R value is 2. So that means that if I have one account, my max loss is $120, okay? Trading 3 contracts. That it might stop 20, okay? And you put your commission in here and your total account. So you read it over here, you have one account, six winners, 4 losers. That would total $240. You paid 40.5 in commission, you netted basically $200, $1,000 a week, 4,000 a month, or down here, $46,000, almost $47,000 a year, okay? Now you think like, okay, well, I don't know. I don't even know if I can get 2 to 1. What if you get 10 points, but your losers are 7.5, but you're still 60%? Well, you're still doing $32,000 a year on 3 contracts, okay? So where it gets really interesting is, let's say you get all these numbers, which are mediocre, really, 60%, a 1.3 R value, and you're still making $33,000 a year net. Now let's say, hey, you build up to 5 accounts. I put 5 accounts in here. The table will automatically adjust. Well, look at that. Nothing changed, but you're doing 5 copy accounts, say with Replicano or something. So now you're doing $3,500 a week, $14,000 a month, or $163,000 a year. Okay, and you're still just doing mediocre performance. Let's say you go to your 60%, right? But now you either make 10 points or you lose 10 points. Okay, so now you're like, okay, you're barely over 50-50, but you're still, and you're making 10 points or you're losing 10 points, and you have 5 accounts. Well, look at this. Check this out. You think like that sounds like it's like nothing, but that is actually $100,000 a year. That's 235 trading days. You can put in whatever you want. There's actually like 252. So I gave people 3 weeks off here. If you think you're going to trade every single day, then you can put that in there. So This is mediocre. It's like 10-10. It's like 50-50, and you're slightly above win rate there, and you're still making $93,000 a year. Okay. Now, I know people who have the 20 accounts, but let's just go to 10, same thing. Now you're at 186,000. This is net 100. Now you're 15 and you max out, you're at 280. And let's say you go to 20 accounts, and this table you'll see it all fill out there. I got to fix that right there because I put some spaces in here. $373,000 a year. And that's trading like kind of mediocrely. That's a word. In a mediocre fashion. And that's also only 3 MNQ contracts per trade. You could say you could trade a 1 lot of micros, and if you can achieve this and you have 20 accounts, you know how hard it would be to blow your account out with 1 micro? That's your max trade loss on any trade, okay? And trading 20 accounts, that's what that means. So just so you'd be used to seeing that, like if you had and you looked on your screen, you'd see 20 lines of red, it's $1,600, but it's only $80 an account, which is what really matters. And you'd still be making 124,000. You could make mistake after mistake, and it would take forever to blow that account out. So by looking at this, you can determine what your goals are. Okay, that's 2 MNQ contracts, making 10 points or losing 10, and winning 6 out of 10 trades. Okay. So this is why we trade micros, because your accounts are much safer. You don't need to do stuff like certain people we know whose trade rooms start with Targets Trading Pro and stuff where it's just a total shit show, and you're learning bad habits, you're losing money. It's just a farce. Okay. This is how you should be trading. Okay. You trading, managing your risk and trading well. Okay. So this is where this tool comes in handy. Okay. And everyone gets this who's a member, and it's kind of critical because it helps you determine. But I mean, just to give you an idea, like if I do 3 lots here, and my average rate, which is about 67%. If I just got to put it in here, that's 64. I think 8 and 4. If I did 12 trades, okay, 8 and 4 is 12, like 67%. And I do better than that, but I won't give myself much better than that. I'll just say, and I don't go for much more than this. I get what it will bear, but I take some off there. So that's 40. That's 10 points on a winner, 7.5 points on a loser. 2 out of 3 basically trades. They're successful trading a 3 lot. If I had 20 accounts, that's $1.2 million a year. Right now I have 10. Whoops, 10. And that's 590,000 if you can maintain that. Okay, so enough of that. Let me see here. I think we're on to the next stuff. Okay. Just again, so make sure you read the disclosures there. We're going to go through the websites here soon. Again, the markets are dynamic. We're looking at structure trades and trend trades. Well, I'll cover that after. Let's go through the screens, okay? All right. So this is a master screen over here. Got to get rid of that. One of the things is my background as a test pilot and fighter pilot. I have redundancy on everything because when you are trading, it's stressful. It's easy to forget or block out noises or alerts or things like that, both visual and audio alerts. So you want to, in my mind, you need to have redundancy. Okay, so that's what the system does. Okay. I have internals over here that I use to judge which side of the market to be on, and also to see when the market is turning. Oh shit, what did I just do? I hit a button. Okay, whatever that was. I got a programmable trackball mouse thing. Okay, here we go. This right here is kind of the backbone of the system. This has alerts built in. It's looking at multiple different time frames. the colors are green are there's 3 different time frames. They're all aligned. If it's blue, they are on a deeper pullback, but it's a discretionary long, just meaning that the setup is long, but the market could be shifting. And then gray is a neutral, which means the market's in transition, so it's sit on your hands time. Then the opposite side of the spectrum is red is aligned down. Orange is the conditional short, and the gray is when the market's transitioning. So you can see here, while we are in a downtrend, okay, the market is cycling, okay, because we're going between the red and the orange a lot, but you definitely want to be on the short side of the market. All these are programmable. The lines in here that you're seeing, these are short signals coming in, okay? So on these pullbacks, these retracements, these are pullbacks to short. You can see crude's been in an uptrend, all right? So this is like 140 and this is like 104, something like that. So if we went and looked at 140 on like NASDAQ here, it's a 2010 chart. This is one, it wasn't how I was planning on covering it, but I'll just show you real quick. So that was 106 or something. So shocker right here. Oh, and on
Dow
each
set up
chart,
signal
right,
long
you
on
get
the
the
E-Mate4.
redundancy of what you're seeing on this chart, on the prior chart. So 106 was like in here. So you're getting short in here, okay? And one of the other benefits of this, of trading micros, is that, you know, you're not going to get shaken out. Like the move hasn't even started. So we get like a nice divergence here. You see the lower low, higher high. So you'd be adding in here, or maybe you didn't get in on this one, you got on this one. It doesn't really matter, but you put this on and your stops are staying there until we're seeking targets. Okay, we're seeking levels in looking at the structure, which we aren't seeing that here, which is on a 15-minute and 3-minute chart, which is behind here. Okay, so that helps us target the areas, and you can see I've annotated here. Okay, there's fib clusters, there's DeMark levels, there's our proprietary zones. It looks busy, but that's because I was trading it earlier. And once it's like anything, once you learn it and spend some time with it, it becomes more familiar. I remember the first time I got in a couple of jet cockpits, some of the more advanced stuff, it's overwhelming. The cockpit is just entirely crammed with buttons, knobs, screens, and everything. But you break it down into manageable pieces. This screen does this, and you learn this. This is how the radio works. This is the weapon systems. This is it. You spend time with it. You spend time with it in the simulator, and you gradually put them all together, and you realize, hey, I'm not using them all at the same time. They're integrated, and you understand how they work together and stuff. So it's kind of like what all these mean something, but you are only looking for certain setups when you need to. Okay, so the other one was like over here was whatever time they all kind of got up. There was, yeah, 1338. So that's this move up here. So same kind of thing. We're looking for shorts in here, and see the signals are coming in there. So this gives us audio and visual alerts to when that's happening. So you can have one screen like this on your computer, and it can, you know, just, you don't need the whole thing to show. You can just have it like this, you know, like a panel of it, and you can see what's happening. And also it gives you context, like what's happening right now. Well, YM's stronger. It's shifted from down to up. NASDAQ is improving a little bit. ES is improving a little bit, but both Russell and YM are stronger. Okay, not as strong as crude, but, and it's kind of a mixed market. So just looking at this, it gives you context. Okay, but just by looking at what we just did, one second, gotta adjust these. Kind of messed that up. Okay, but you can see I didn't even see this chart, did I? No, I just saw the other one and I knew that those were coming up to sell. So you see, these are deeper retracements, okay? We're not taking this in here unless there's a good setup. These are deeper retracements, which again, it went orange, which means that it's conditional short. It just means look for other signs, and that the other signs could be confluence of the market reaction zones, things like that. This is, coming into this push down into the overnight range, and I don't expect you to know all this, but this reaction here, I'm expecting this to bounce, which it did, and we bounced from like, the bottom here, 06 back to 40. So at which point that's a short, which is this trade right here. So this is learning how the nuances of how the market moves and how price action, moves into support and resistance. And then there's, trading, the difference between trading structure and trading trends and things. So again, it depends on we were in a protracted short move here. It's a 15-minute chart. The market's going to respect the 15-minute level, and it's just driving down until it gets exhausted. We're at 210 on the ADR. Okay, and then we came into support at yesterday's low. There's a range extension here. This is also a support zone. So there's a lot going on to support this for a bounce. Okay, but that's how this particular tool is used. All right. So that's just as part of here. Here is the tick strike, which I pay for. So you'll hear that. It's I think let's have it off, but it's a Geiger counter-like device, and I don't want to sit here and play with this and to get it all on, but yeah, I think I need to set it up. I was using it for something else, but this is like a Geiger counter. It will tell us when the market is selling or buying. So that's good, especially when the market gets extremely frothy or very negative. You don't want to be thinking you're buying support and have this thing melting down. Okay. And then the Replicanto, which you already know about that, or Copier, have the alarms and the alerts for things like this, like check for the 8:30 news. It comes on 8:25. Crude opens in 5 minutes. Market opens 9:30. Check for 9:45 news. The check for 10 o'clock news. So this is also, we don't miss any of this. Okay, we don't want to miss any of this and get run over and be in a trade. Here I got the market leaders, laggards. I've got news again here, and then this is just the data box. I also have I pay for financial juice, so anytime there's live news, breaking news, we will hear it. So you don't have to pay for that. It's in the background. It's a nice English fellow, and he reads off all the news in real time, plus any of the financial reports. You get that very quickly. So it's kind of important, but this will this down here will keep us out of the market, all the alerts and buzzers and stuff, and not making a silly mistake. So again, redundancy. We've got it here, we've got it here, we've got it down here. Plus the members, that's part of the community, is you say, hey, news coming up. Okay, over here. I get trading view, I get the financial juice. One of the things we do we do in a lot of trade rooms, the prop firms, is we listen to relaxation study music, alpha waves, things like that. And I don't know if you'll hear it. I think I'm sharing this. I got to check all these, but basically it's plays in the background while we're trading. It's basically it helps calm you down, it helps soothe you when things get stressful. It's actually very nice. It's not like spa music. It actually is scientifically proven to stimulate your brain, make it easy to concentrate and focus and things. That's what people listen to in actual trade rooms. They're not listening to rock and roll, Metallica and stuff. That's not what, that's not going to be your best bet there. So this plays in the background. I don't know if it's playing right now because I got to check the settings. But it's the alpha waves, things along that line. They play for the entire time we're on. So let's see. Okay, there's that. All right, so let's go to one of these screens here. Now, here we have three types of screens. We have 15-minute, we have execution charts, Ninja Renko, which are their trade execution charts, and then we have 3-minute charts. So we would start in the morning, and this looks kind of busy, and it is. But again, I can remove the some of this. Take the and it makes sense as we're trading, and it builds. I mean, because we add the lines as they're coming, things make sense. Let me remove the drawing object. Yes. Okay. So this is basically the 15-minute chart. All right. It's got our tactical trade filter, which is a filter, and there's a 25-page manual that goes with this, but I could trade just off of this, understanding price movement, price structure, range analysis, things like that. You see these lines right here. We have like this stands for break and hold above is a bullish confirm. Break and hold above this is bullish, so we broke above it, held, it kind of went up. Pre-market supports down here. If we can break through that, the market breaks down and we're weak. This is the overnight range from last night at 6 o'clock, which it's very valuable. And you'll see all that because it will come into play almost every day. Here's our ADR, our average daily range. You can see we've kind of hit that down here. So that's typically when we recover. This is the overnight, the opening range. And this comes into play with a lot of the other things. Up here, this is our indicator, our MRZ. See, I can take these off and put them on just that easily. If you want to see what the market is doing, kind of, you can click these on. So this gives us those zones, which are the market reaction zones. And then these are more, these are fib clusters and DeMark numbers, which a lot of institutional firms pay, I don't know, 50 grand plus like a month or something crazy for these. Tom DeMark used them at some firms I was with, and they're actually really good. But what we're looking for, we're interested in the clusters. So we're looking to combine these and then use these with everything, with the rest of our tools. You can see here's a floor pivot. There's one of our proprietary zones, which is a higher time frame. There's a fib cluster in here, and plus it was the OR low. So I'm not saying there's particular trade in here. The trade was short. There's all these retracements here were short, and then these were, you play these for bounces, and then these would be short continuation trades in here, which is a lot. I mean, there's this downtrend. All these bounces here are shorts. We get down to here. This is like a layup trade back into OR low, and then a breakdown. Okay, and then once we get into this 100% extension, and I'm moving fast, but this is all stuff that we do. Okay, and it's all part of learning how to actually trade for real. Okay, let me get rid of that. But one of the nice things is our market reaction zones, as you scroll back, they all adjust for that day. So it's really easy to go back and kind of see like, hey, what, how did they do that day? How did the market perform? You can kind of, it's just like working a simulator as a pilot. You go back and you can kind of see like, okay, this is what the tactical trade filter did that day. You can see it acted as, support in here, right? Reacted as support, up, whoops, down with this held, we came up. This is typically what you see, a breakout of OR high, and then a pullback, and then a long. And then, so all these here, you should have been buying, this. And if I went to that day, this right here, I can tell you was a trend. So at that point in time, whatever day this is, let's see what day this is. This was the 23rd. So the 23rd, after we broke out at like, I don't know, 2 o'clock. See if this will work. So I didn't mean to get into this, but let's see if 23. Okay, 23. So you can see kind of a crap day, right? So far. I mean, this would tell us when these are all out of sync like this is blue, this is green. I haven't gone over this chart yet, but I'll give you the basics of it. Well, a little bit of it, but trust me, this stuff all works, and we're waiting for alignment. Right now, I can tell you and the more you see this, I can tell this is not a market you'd be wanting to trade unless you knew how to use these indicators, at which point I could beat the market up by taking support and resistance trades in here. But this is the part of the snippet that we were looking at, right? I said it broke out. Well, once that starts to break out, that's what we're waiting for. What did I say earlier? The best trends, the easiest trends are the trend trades because they're most forgiving. If you make a mistake or have a poor entry in a trend and there's momentum behind it, guess what? It's going to come back to your 9 out of 10 times, it's coming back to your entry. If you make a mistake on a fade trade that's a support and resistance, and the market is going through like a NASDAQ rip, well, and this is how people blow their accounts out left and right, is because they can be right 9 out of 10 times, and if that 10th time is they add to it, waiting for the market to come back, well, guess what? You get up to your max 8 contracts or whatever, and all it needs to do is go like 6 more points, and boom, your account's blown. So those are why those are less forgiving. You can't afford to be wrong on those and you can't afford to have poor risk management or discipline, because if you do, it's going to eat you alive, and you're going to be in the endless cycle of EAs, maybe some PAs, and then blow them out. So that's why I said that for most people, trend trades are the way to go. Sometimes the market's not going to give you that, especially early on. It's trying to find direction. So it's support and resistance. It's structure trades. But if you know how to trade them, they can do really well. But the best thing to do for those is to scale down. Now, why did I show you that stuff earlier? Why? Because you only need to trade like 1 to 3 micros to do really well. So even if you're wrong in your trading structure, if you're adhering to that, 2 or 3 micros, then you're not going to blow out your account, okay? But the more you practice this, the more you understand. So on this move up here,
early market on close imbalance, currently sitting at 21 million to the buy side.
I'm looking down here because I know what I'm looking for on this indicator, okay? See how this is all green? Everything is aligned. There's like 4 time frames being looked at in a couple of different momentum factors
set
and
up
some other
signal
things,
long
okay?
on the ES42.
I didn't, I'm not even looking, but this is back when we went and that off of the chart, and I said, let's go look at the 23rd and see how it looked, right? Well, again, can you make money with these entries? And not even having to see the price. I didn't even see the price. I didn't see it on the other chart, right? But I knew that this was happening. I can squish this up like that. Those are the same entries, like I marked it earlier. That's why I wanted to get your attention. If you guys ever saw, what was that movie with Glengarry Glen Ross? Have I got your attention now? Okay. Well, part of this is why, do I have your attention now? All right. If you can turn on the monkey brain and just like push a button when it gets to there, and you have the patience to wait for that and to not get sucked into this, see how this is all different colors? I call it like, I was calling it the candy cane, but now I'm calling it lifesavers and stuff. But if you know how to trade this, then you can make money in that too. But if you have patience and you wait for, and it doesn't look like any of even this block of red, you see the block of red? Then there's the shorts in here. There's right in here, there's shorts. And if I widen this out, and you do a micro, so you don't get like shaken out. That this went in the middle of this. If you just had a crappy fill, 70 and down to whatever 35, and we don't know the zones, we don't know what's down there for support. But again, we're trading from one level to another because that's what price does. Price seeks, price discovery. It goes from one level to another. It's going to bounce between support and resistance until it breaks it, and then you get your runs. Okay, same thing here. See, everything turned red. So you could have been here this is in the orange area, so it's might as well make this the right color. Okay, so this is short. All right, that's a discretionary short, but you could see it breaking down on other factors. There's a big run right there, and we're waiting for the red, and then here's a pop right here. This statistically goes out. This is above 2 standard deviations, so that's a big yes. That's a big yes. This is a big yes. Okay, Now, again, not doing anything special. I just know I know what went into these programming. These took a year to program, but they're based on me trading for 20 years, 25 years. But most of this I've learned and came up with in the last like 10 to 12 years. So, but can you make money on those entries? I don't know. You tell me. And again, micros on multiple accounts. Okay. All right. So basically, I'm not going to go into all the indicators here because I'm not going to discuss them anyway because they're proprietary. And yeah, we'll be releasing those, but not for, second quarter, end of second quarter, either leased or being sold. Not sure which. We're still kicking that around. But you would get templates for all this. They're basically once it's set. I haven't changed these since I developed them. Like since we program these are the same settings. They work on any market. You can trade any market anytime. And I'm not just saying that. I do it all the time. So that's why I have this, so I can follow multiple markets. And if you wanted to trade, I don't recommend anything less than 2 screens. That's my preference. But you can trade anywhere you want. But if you have this, you don't actually need this, but that's how you can track multiple markets, because this is that same indicator shown on the bottom of every panel. Okay, over here I've got the micro Russell. I have the YM over here. See, so I can basically, you could have these on tabs. So that's what I'm saying. You could have all the markets on tabs. You need a structure. You need a structure one, like right here. This is Russell. Okay, we're not going to analyze the market here, but just why it's important. Here's OR low. I don't know. There was a consolidation here. We broke down. Okay, you tell me if structure is important. Yesterday's close is 50% range extension. All right, we're getting up in the ADR. This was 95% below the TTF. Okay, which means we're going to break the lows, and it's a weak day that you want to just stay short. I don't know if you sold that. How did you do on those sells? Okay, whoops. If you know what you're looking for. All right. Now these are structure trades, but you could have been done if you traded the trend that was here. And I can guarantee you, if we pull that up from 9 o'clock to 11 o'clock, there were easy trades in there. What I say, like fish in a barrel. All right. Some people heard me say this, but I'd call it the Gretzky trades.
Total money market
Wayne
fund
Gretzky,
assets
greatest
fell
hockey player.
$1.39 billion to
Certainly
$5.96 trillion for the week ended January 24th, according to ICI.
By like 1,000 points. You could actually take away all his goals, and he would still be the all-time leader in points in the NHL, because that's how many he had. They're like 3,000 points. If you take away his like 1,000 goals, he has 2,000 points, which is still more than anyone else in the NHL history. So early in his career, he was asked, like, what makes you so much better than everyone else? Or what do you think is what makes you so much better? And he thought about it for a second. He said, well, I guess it's because everyone else skates to where the puck is, and I skate to where the puck is going to be. And it kind of like sounds a little bit like, what do you mean? But if you understand hockey, and I'm a big hockey player, but it just means that he's thinking a couple steps ahead of everyone. He's thinking like, not like, oh, there's the puck, I got to go after it. Like, just like reactionary, like emotional. He's thinking methodically, like, okay, this play develops, it's going to go over there. There's no one over in that position there. If the puck gets out there and I'm open, and he's thinking like that. So the same thing with trading is like, you can't just get caught up with where's the price right now or what it is. And you got to have the bigger view of what's going on and where price is going. Because that's kind of going to tell you, like, if I get in here and price is going down, my target's like half of my risk, well, then that's not a good trade, is it? Right? It's not a good risk. And so you got to kind of have an idea of like, where is it going? So our tools, show us that, from ADR to the levels and the zones, the market reaction zones, those all are the little tools that add up. Okay. So here's the morning here. I already marked them. I probably took these. See how we were green in here? So there was even if you were like, oh, this got green. like these were at least break evens. Okay. If you got in on this reversal, your stops here, that's a partial and a break even at worst. This one here, partial or break even or small loss, depending on how you did it. Now, again, we aren't looking at structure. Maybe this was an awesome short because there's a divergence in here. I'm just going by this trade in a vacuum. This was one chart in a vacuum. So again, if I didn't even see the price action, I know that these trades, especially this one here, these are above 2 standard deviations. When this gets up in here, this one is off. I don't know who marked that. So red, 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 I want to see everything line up, pull back, pull back, pull back. And then, you know, it gets out of the red and we start getting mixed. So then you got to start looking more structure in there. So, I mean, I consider shorts in here, but usually I want to see a divergence. So if I were going to do a short in there, this is a small, looks like it may be a small divergence. I'd probably be more there. Okay. So I didn't see the price action and that's your entry. Okay. I don't know. Can you make money with that? You tell me. These are small, these are break evens or these are partials and break evens, depending on how you're getting in. You know, that's, you know, 3 points, almost 3 points, and then a big one, right? We hold, we hold, we hold, we break. So there could be structure down here of support, and that helps you decide, like, hey, everything is lined up on multiple timeframes, multiple, you know, momentum indicators that are adding up to those factors. If there's a big magnet down here, guess where we're going? You know, and this is probably a divergence. I don't have them on here, but if this was a divergence, then you probably don't want to do this one, even though it worked out all right, because you're probably looking for a deeper pullback. So here's that where it's saying if this is a divergence, see we got like another one here. So this is the stronger divergence. So if I played this and I got that and I didn't, I mean, see, it came right to the high. You know, maybe I went to break even, so I'm out of break even. Maybe I took a partial. But if I see this again and I want to play that, you know, I got to be careful. It's mixed. These are the fish in the barrel trades over here. These are the
Early
ones
market
where,
on
like, you
close
gotta,
imbalance,
it's like
still sitting at 21 million to the buy side.
Or if you know what you're doing, and these are the bread and butter. This over here, this is, you know, advanced. This is trickier. You got to be willing, you know, like, let's say this went, you know, rocketed up. Well, you better, you know, you better have discipline enough to say, like, if you put your stop there, and this is the kind of stuff NASDAQ will pull, right? It will suck you in. It was starting to shift. That's why this starts the, you know, this is why they're colored like this. They're, you know, visually to let you know that the market may shift up, and then that's what the NASDAQ does. So you take out a small loss. Well, that's easy. Now it's easy to get aligned. Like now the market rips up. Here goes NASDAQ, right? Well, if you played this and did sell, 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 and now you're blown out, or at worst, even if you got back to break even, they just beat the crap out of you. You can't think through that. So now you complain and you whine and you miss the move. If this thing like broke out here and went up, you know, there, well, and you're buying on these pullbacks, you participate in that. Okay. You don't sit there and, you know, kick yourself. And the old trading phrases, when people say, wow, what a squeeze, you know, it's only a squeeze if you're on the wrong side of the trade. If you're in it long, it's oh my God, what a rally. Oh, if you're on the wrong side of it, it's a squeeze and it's painful. So we try to avoid that, which I guess kind of brings me to my point, which one of the points is that there's let me just draw in one of these side charts here.
NASDAQ set up signal long on the NQ
in trading,
2010.
There's a lot of things to learn. Why isn't that sharing over there? Huh.
In 5 minutes.
I wonder why that's not sharing. Oh, there. All right, trying to share a screen over here.
Dow set up signal long on the ES42.
I have a 3-minute charts, okay, and that they go side by side, and that's how I can tell at a glance what the relationships of the markets are. Because, like I said, I have 3-minute, 15-minute, and that's what, and then the execution chart. So, like here, I get the 15, I get the execution side by side, but the 3 minutes I keep in a square of 4, because I can see all 4 markets and how they're relating along with what's going on over here. Okay. What's going on with this relationship. All right. So when I come to the 3-minute, there's a lot of good information on here, but I can at a glance see what the interrelationship is. So often I'll trade on the 3-minute chart. Okay.
Dow set up signal long on the EM84.
This is the NASDAQ. We were 70% below. I sold this. Why? Because it's 70% below. And if you look at the 25-page manual that comes with this, the goal, the target, when this thing is like that, is that we're going to falsely break the high. Doesn't mean 100% of the time, but this is what's typically when the market's weak. And then when you know what the other markets are, they're weak, then you can you watch the interrelationship and you sell that. And you're going to at least here, and you're going to pause down here. And then I probably sold it again in here because we hit then it acts as resistance. And then we came down here, and then we held a little bit. And then you sell this, where it's the OR low, it's the 61 fib. And I don't even have all the other stuff on here, but that's a sell. And you're part of it, you're already in a downtrend, right? There's a big, so that's a sell. And then we come down into yesterday's low, 100% range extension, the bottom of this range here. And guess what? We're at like 210, which is reasonable. We're at 224, 228, 180. You're in the ballpark, and you're also into key support. So 3 minutes are a great chart, to trade off of, and but they all work together. So that goes back down there. So what I wanted to say was, oh, there it is. So now it's going to show it. So here are my four charts side by side. There's a lot of stuff on them, but remember, I can click off of this, and it's just because they're squished up. I can see it. You don't have to have all this on here. It looks like a shit show. It's really not. But if I expand it when I need to, I get volume profile on here, then it's pretty clear.
Early market
Again, once you know what the lines mean, what's on there, you
buy
might
side.
not, want all of them on there. You can take them off. But if you know what they are, then I can pull that up and just trade off of that when I know everything that's going on. So let me see if I can do one more thing here. So in trading, is that going to draw? No, it's not going to draw. I got to pull this down. Okay, I got a blank spot here. So in trading, this is important. There's what? There's how should I phrase this? I'll say small. Okay, there's 4 types of trading results. There's small win, right? Big win. Small loser. Whoops. Small loser. Big loser. Okay. So your job as a trader and is that if you have a method like I was showing you earlier, right, with the calculator, it doesn't have to be. You can have a 20% win rate if your win ratio is like you win 6 or 8 to 1. That's what the turtles had. They did breakouts of fundamental breakouts in markets, so their success rate was like 20%. So they do trade like loser, big winner, loser, big winner. Okay, because the math worked. All right, they were holding for fundamental stuff like the coffee market. There's a dock strike down in Brazil, or there's some kind of infestation and stuff, or there's a drought in the Midwest and all the crops dry. So and that's how they worked. So it just depends on what it is. As long as your system is like, hey, I win 60% of the time, 40%. That's not even that good, but it works if you can have a 2-to-1 ratio, or even a 1.75 to 1 from winners to losers, like we were showing. That's why that's important. As somebody I know says, that the baseball Hall of Fame is full of people who hit, just singles, and that's all you need. 3 micros over and over and over and over, like we showed earlier. You don't have to hit home runs and grand slams and doubles and triples. You can hit just singles and singles and singles. And they batted what? 300. That means that if they batted 300, or that it's like 1 out of every 3.5 times up at bat, they get a hit. Okay. You don't need to set these unrealistic standards. So the point of this is that if you do small wins, big wins, and small losses, and you will get rid of these, okay? So there's no big losses, and that's all risk management, okay? It's risk management and understanding what the stuff we were talking about. Well, guess what? Now you have small wins. Let's say those are ones, and then you get small, or twos, and these are small losses or ones, and big wins are 6. The math is going to work out. You can't basically lose if you eliminate the big loss part, okay? So that's important to understand with trading, and that's what we're doing here. I showed you multiple times here that that's essentially what the system is doing. Even if these are break even, big win, break even, like in big win, this is, like that. These are all going to be, most of the times, these are going to identify, because these are momentum and trend trades. These are going to be good trades. They're going to give you at least a partial, if not, like, you can do all in and all out. If you're all in and all out, even if you didn't get this whole thing, winner, maybe winner, break even. And then depends on how you play that one. But even if that's a loser or a break even, it's like if you're going, like you go NASDAQ and go, I'm just going all in, all out for 10 points. I could bring that chart back, and I can guarantee you, because I've done it, about 80% of the trades are successful. All right. If you just go, it's like 8.5, like it was like 90%. If you go to like 12.5, it's like 80%. If you go to like 15, it was like 65 to 70% go at least 15 points. So, you can play with your ATM and figure that stuff out. So anyway, I think I covered enough here. With that, I just want to kind of start to wrap this up. Let me see.
Markets on close
So,
imbalance,
water.
1.8 billion to the buy side.
So again, we're looking at structure trades and trend trades. We prefer the trend trades. They're more forgiving. They're easier to trade mentally and
At 4 p.m.
financially.
Eastern
They're
time, we
less
get
risk. They
Intel's
lend
fourth
themselves to
quarter
trade multiple accounts.
2023 earnings,
And be a
estimated
copier.
EPS at 46
But also
cents, and
structure trades can be
estimated
very
revenue at
lucrative.
$15.11 billion.
They're a little more advanced, but in the room, you have a choice of taking those or not taking them, or taking, smaller positions on that, which is usually what I recommend, because they can tend to be, again, pretty lucrative. But you also have to be pretty nimble on those, because if the market reacts to them just briefly, and then like, let's say it's a sell and you get in and it drops like a quick 7-8 points, well, that's enough. But you got to be quick to move your stop to break even. Most of those trades we manage, manually, and you need to have ATMs for all this. So the trades are already on the screen, and I have something pretty exciting coming out. It's like an indicator, still in development, but it's actually it's an execution tool, and it's the only tool that I've ever seen that actually will make you money. Sounds crazy, but what it does is it saves you ticks. And I can't go into it. I will when we come out with it. But it will either make you ticks when you enter, or it will save you ticks when you enter, depending on how you enter it. It will improve your trade. So let's say you can improve every single trade, and you're trading NASDAQ, and you can trade it and improve it. Let's say I ask somebody, and they say, like on every NASDAQ trade, you can go in and see your maximum adverse excursion, which is how much the trade went against you. If you went in there and saw it and it went, on average, like 8 points against you, but you could cut that down to 4 points, and it was a full contract, let's just use that, then that's 4 points, that's $80. Well, if you can improve that every single time, and you do 10 trades in a day, right? What did you just save? You saved 80 times 10 trades on one lot. You just saved $800, and that's on the entry. So you can do the same thing on the exit. So it's literally the only tool that I've ever seen that will actually make you money. Because even if you had a losing day, let's say you lost $800. Well, if you had this tool and use that example I just gave you, you actually made $800. So you'd end up at break even. Or if you had a big losing day, like, oh, I lost $2,000, well, you would lose $800 less because you actually saved that on the entries. And if you were to make $1,000 in a day, you would actually make an extra $800 because you got in, that many points better. So this tool, which has taken a while to develop, is pretty amazing. So I'm kind of excited about that. So anyway, but it's sometimes the market, that's all it gives us is a structured trade. So it's up to each individual trader, to determine, the trades you want to, you prefer and you want to take. It has to go with that. You have to give that some thought. But, in the room, we'll discuss that, and, it's covered in the material and things. You'll learn all that. But ultimately, each trade is responsible for their own account, obviously, and managing their trades. But a lot of that, is done in the room. We give the stops, the targets, things along that line. But and I'll give you templates for the ATMs, and you can tweak them, to your own desire. But if you listen in the room, you observe and focus, you'll learn a great deal. Now, it's not, there's no substitution for mentors or organized education and mentorships and things, because that relationship, it offers you more opportunity to learn on a closer, intimate level, ask questions and be evaluated, etc. And I myself had 3 different mentors at Hull Trading, Goldman Sachs, and Kottke Trading, the 3 main firms I traded for out in Chicago. And I then became a mentor and a consultant, and I trained prop traders at several firms. So I know it's pretty indispensable because I've been on both sides of it. So if it's within your budget when we get to offer those programs, and it'll be later this year, if you're serious about becoming a top tier trader, then I would seriously consider the mentorship program, the education programs that we're developing. There's just no replacement for that. But if you're just happy coming in the room, making some money, and doing it in a far less stressful way of the roller coaster, then you're gonna enjoy it. Again, we're trading level to level. We're batting singles, doubles once in a while. We get some nice big ones. But again, small winners, big winners, small losers, big losers. We're getting rid of the big losers. Okay. So if you have a decent trading method, and we do, and you saw it, if you control risk and you can eliminate the big losers, the math's going to take care of it.
Fourth quarter 2023 earnings, estimated EPS at 46 cents, and estimated revenue at $15.11 billion.
Facebook, certain rooms, just full of shit. Okay. You take statistically smart setups with an edge, and that's why it's called Top Gun Trader's Edge, like we do here. And then you manage positions and you use risk control, and the rest takes care of themselves. So in conclusion, guys, I hope, guys and girls, gals, I hope this provided an excellent overview of what to expect. Watch it. You can watch it, multiple times. I highly suggest it. Go to the website, look at the information there. There's good information there. Feel free to reach out to me via email for any questions. Make sure you signed up, for emails, things on that line. I hope, when you get this is going to be part of the launch letter, the launch, information. There's some promotions. There's some great, deals. The quarterly and the yearly programs, memberships are already discounted, but I'm discounting that on top of that because I just want to, get it launched. I want, a good core of people to start with. But again, I'm hoping to see you guys in the trading room. I know a lot of you from, other rooms or just from, just my own room where we trade and things, but I'm looking forward. I'm excited about it, and I hope you are too. I really appreciate your time and your interest in both Top Gun Trader's Edge and Top Gun Trade Zones, and I hope you, we can help you move to that next tier of trading, and finally offer some, some products and services that actually perform and work well for people. I'm just tired of seeing all this crap that's out there. And this has been 14 or 15 months of a lot of work, an awful lot of work and money to put into this. And it will just do nothing but please me if I can bring that to you guys. So I look forward to seeing you in the room, and thank you for your time. Talk to you later, guys. Bye-bye.
Crude setup signal long.